Good afternoon, or possibly good morning, depending on where you're listening to us today. This is Scott Maurer with Advanta IRA with one of our weekly educational webinars. And today we're going to talk about making precious metals a part of your portfolio. A lot of our clients over the years have sought to use their IRA funds to invest in gold and silver, sometimes as a hedge against inflation, which is definitely something that our guest speaker is going to talk about today. And also just kind of as a matter of holding metals as part of the diversification of their retirement account. So we brought a guest speaker and today we'll bring him on in just a moment. He's going to share his expertise about buying precious metals inside of your IRA, or even if not in your IRA, the information you'll glean from today you can take and put to use with your personal funds as well. My name again is Scott Maurer. I'm the Director of Business Development with Advanta IRA. I've been with the company since 2006. I'm a licensed attorney by degree. I don't do any legal work for Advanta clients. And my contact information is here on the screen. So if you have any questions, during the webinar, if you're listening live, you can certainly type those into the question box on your screen. And either myself or our guests will make sure we get those answered for you today during the presentation. If you're listening to a recorded version though, here is my contact information. We'll have the contact information for our guest as well. So you can reach out to either one of us with any questions that you have. So any questions relating to IRAs or more specifically self-directed IRAs, email me, give me a call. I'll be happy to spend a few minutes on the phone with you and get those questions answered. Just have to read our disclaimer here at the start of the webinar that we, Advanta and its employees, do not provide investment advice, and we don't endorse any particular products. The information that we present in our webinars, in our educational series, are for educational purposes only. So if you're looking at making an investment, not sure about a particular investment, of the legalities, the tax impacts, then you would want to consult with an attorney, CPA, or maybe a financial advisor before entering into that type of an investment. If you need referrals to one of those individuals who are also familiar with self-directed IRAs, just reach out to me or one of the members of our team, and we can certainly point you in that direction. Just a quick note about Advanta IRA. We are been in the industry almost 20 years, over $2 billion worth of assets under management. And every client that we bring in Advanta, every client gets assigned and has a dedicated account manager who gives them one-on-one concierge level service regarding their accounts, whether you're investing in real estate, whether you're investing in gold and silver, you'll have that one point of contact. And so that's really how we try to separate ourselves, is with that customer service. And certainly also our education. We do 1 or 2 weekly educational events per week. We also offer a networking event that we hold every other Friday. You can look at our website at advantaira.com to see when the next Pitch, Promote, and Prosper event will be, where we actually will allow you, the guests, to come on and tell us what you're looking to buy, maybe what you're looking to sell, and have some more direct interaction with other folks as well. So we're really committed to education and networking. All of our webinars are recorded, so if you ever miss one or you'd like to listen to this one again, you can check that out at our video library on our website, or also go and find the link to our YouTube page where all of those events are housed. So when we're talking today about buying gold or silver inside of a retirement plan, the types of accounts that you can do that through with the retirement plans, any type of IRA. So this is, I guess, important part too. If you're wanting to do this and wanting to have a retirement account that would qualify, traditionals, Roth IRA accounts are individual accounts, individual retirement arrangements. There are SEP IRAs and simple IRAs, and also solo 401k accounts for people who own their own business. They have just a larger contribution level that you can make. So any type of IRA is eligible to be self-directed and then used to invest in gold and silver and some of the other assets that you can do inside of an IRA, but also any former employer plans. So if you're looking to, hey, I want to buy and sell, I want to buy and hold maybe some gold or silver in a retirement account, but my money's tied up with an old 401k, you can still use those funds. The only accounts that sometimes are restricted are your current 401ks, your current 403b plans. As long as you're employed, your employer can place some restriction on those in order for you to use those money. But any former plan and certainly any other IRA account can be self-directed, which means you can use that money to buy gold and silver. When it comes to the different types of precious metals investings that we've seen inside of an IRA account, probably the most prevalent has been people investing into, coins, basically gold and silver, American Eagles or Canadian maple leaves. Coins that are minted by a government agency that are at least, I think, 99.5% pure. And our guest host can maybe correct me on that when we get to him. But that's really the precious metals we see purchased most often are the actual gold and silver American Eagle coins. Also the bullion bars. You can purchase those and hold them within your IRA as well. Certainly maybe not within a self-directed account. You could invest your IRA maybe on a brokerage platform into an ETF, an exchange traded fund that the value of fluctuates based on the value of gold or silver. And then there's also the kind of paper gold or gold certificates that some companies offer that you invest with them. You don't actually get the metal itself. You get kind of a certificate that is allocating you to certain gold that they actually hold. But what we've seen in the industry over the years with the precious metals is that the clients who want to look to add that as part of their portfolio, they're most interested in having buying the actual coins or buying the actual bars. Now, there's some rules about what the IRS has as far as who has to act as who actually has to custody that metal, and we'll talk about that on the next slide. But that's been again, kind of with all the clients we've had investing in precious metals, they all want to buy the actual metal. They don't want an ETF. They're not looking for paper gold. They want to know that they've purchased actual gold and silver coins or bullion bars. So again, typically, if you're looking to invest in precious metals with your IRA, it does have to be at least 99.5% pure. The IRS has defined fineness requirements that you can find on their website. And just note, though, just because a coin was minted by a government, whether it's the U.S. government or another one, does not mean it automatically is qualified for an IRA. There are some countries out there that you can't buy gold or silver that they mint. So make sure you check the IRS website for that, or certainly work with a gold or precious metals dealer who is knowledgeable in that subject area, and they can point you in the right direction. Now, it is key to note that the IRS rules stipulate that the IRA owner, if this is your account that you want to invest in precious metals, you are personally not permitted to have physical possession of the IRA-owned precious metals. You must use a third party. A lot of our clients use a number of different depositories that we have relationships with, where we set up an account for them at that depository, and the metals are purchased and then sent to the account at the depository. Over the years, people thought that using a single member LLC, what we call in the industry a checkbook control LLC, would allow someone to get greater control over their funds and then buy metals within that LLC and then hold them personally. That was struck down, not surprisingly, though. That's something we kind of expected would happen eventually. A recent case of McNulty v. Commissioner, where an IRA owner was physically holding the gold and silver within their retirement account, but they were using a single member LLC and felt that setup, that structure would allow them to physically hold that gold and silver in their safe at home. The IRS and the tax court said, nope, that is not allowed. We've said that wasn't allowed for a while, and the IRA owner did lose the tax protections and tax shelter that their IRA had. So just make sure that if you're gonna buy precious metals, you need to make sure that you have a depository lined up if you're using your IRA, and again, we can point you in that direction. And although the precious metals coins could potentially or are considered a legal currency, if you're looking at having precious metals inside your IRA account, you do have to use cash in your IRA to buy the gold or silver. You cannot contribute the metals themselves to your IRA and say, if you're allowed to do, say, a $6,000 contribution to a traditional IRA, you can't simply contribute $6,000 worth of metals into the IRA itself. The IRS requires that all contributions be made in actual cash, so precious metals would not qualify for that. So again, most gold dealers will help you determine which products will meet those fineness requirements and allow you to make that investment inside your IRA. Do your due diligence, obviously, to be satisfied with who you're working. We did have one question pop up and said, will this be emailed? Yes, we can certainly email a copy of the presentation. So when the link goes out after the webinar. If you want that email, just send me a response and I can send you a copy of the slides that we're going to have today. So that's kind of actually another question just popped up before we introduce Joe here with Allen House. Can I hold gold in my possession if it is a Roth IRA since the gains are not taxed? And unfortunately, the answer to that question is no. You still cannot, because as long as it is considered owned by the IRA, you are not allowed to have personal possession. And that extends kind of outside the precious metals. If you owned real estate, for example, in your Roth IRA, the IRS still prohibits you from living or using that property. So the same thing is, even if it's in a Roth IRA, you still are not permitted to hold that metal in your possession unless you take it out of the account as a personal distribution and you remove it from the IRA itself. Then absolutely you could hold it personally. But as long as it's within the IRA, it does have to be held by a third party in a depository institution. All right, so at this time I want to bring on our guest presenter. His name is Joe Allen. He's the president of Allen House Metals. We had Joe back on at the beginning of the year, and we were happy to bring him back again with some of the changes we've seen, certainly in the economy lately, that might impact the ability or the desire for some people to own gold or silver within their portfolio. His company offers to purchase, sale, and storage solutions for precious metals. Like I said, he's talked on our platform before, certainly has talked on others as well, and you can reach out to him at allenhousemetals.com, but I think Joe is going to share his contact information as well at the end of the presentation. So I'm going to turn the presentation over to Joe at this time and let him introduce himself and give you some more information. And just remind you, if you're listening to this presentation live, if you have any questions, we had already had a couple come in, type them into the chat box on the screen or the question box, and we'll make sure to get those answered. But this time, Joe, I'm gonna turn the presentation over to you and talk about precious metals.
All right, thank you very much. All right, thanks again, Scott, for having me back. And I noticed we got a couple of questions already, and I'm excited to see that. So I'm going to move through these slides expeditiously as a result, because I'm sure folks want to get in a question or two. But at the top, I'll let you know, I want to talk a little bit about inflation today and how it affects the market for our savings and your portfolio. I want to talk about understanding how guidance from the Federal Reserve can affect our portfolio and how it's affecting our portfolios. And I want to look briefly at the process of choosing between gold and silver. It's a question we get all the time. And of course, last but not least, I want to look at how the market, I want to discuss how the market looks longer term for precious metals in general. To start, the biggest value add for the attendees today to consider is how diversification of your portfolio is going to protect you from probably what we believe right now is the biggest threat to wealth preservation that we've seen in more than 40 years. We want to help people keep their portfolios balanced and tangible. We want to be able to teach in certain respects because what we want to be able to show our clients is how gold and silver are proven tools for preserving purchasing power. The number one reason we're buying gold and silver is the declining value of the U.S. dollar. That's the bottom line. We're sitting in cash, some of us, particularly since what's happened in the market in March of 2020, the dollar's losing value quickly. So we want to talk about preserving your purchasing power. And I think, Scott, as you touched on, again, at the top briefly, gold and silver are just an ideal hedge during economic turbulence and other risks to wealth building. All right, so without further ado, what does a rebalanced or diversified portfolio look like? Well, I want to offer, and we'd like to offer some things to consider. A rebalanced portfolio it typically is going to have about 25% precious metals in the portfolio, more or less. An aggressive investor may have slightly less than that. By definition, an aggressive investor is considered somebody with multiple income streams. So these are questions investors need to ask themselves, right? What kind of investor am I? Are you aggressive? Ray Dalio is aggressive. He owns the world's largest hedge fund, Bridgewater, and yet he's still got a significant portion of his portfolio in gold and silver, 7.5%. In particular, given that inflation now is robbing investors of their savings, really, and we see we get phone calls quite often. One of the questions that we have is we'll get a phone call from somebody that says, I've got a diversified portfolio, stock portfolio. I've got no assets. The at or near retirement age, you're going to want to have, maybe 25% of your portfolio in assets like gold and silver. Why? Well, precious metals, gold and silver rise over time with the cost of living. What's inflation? Well, inflation is the cost of living spiraling out of control. And you have to remember, during high inflationary periods, typically precious metals will rise while stocks are typically going to plunge. We're going to talk about the market in a second, but you want to have gold and silver in your portfolio to protect against things like stagflation. This is a term we hear in the news all the time. Deflation, and when prices drop, the threat to wealth preservation tends to be even more acute. So gold and silver are ways for us to protect and preserve purchasing power. We want to protect our assets. Unlike anything else that we could potentially invest in, think about this. Unlike stocks and bonds, paper investments like ETFs that we spoke of earlier, futures and options, mutual funds, all of these investments have greater risks than physical precious metals stored in an independent depository. They do. Gold and silver face no credit risk, zero credit risk. They hold value, their intrinsic value, and they tend to increase in value over time with the cost of living. And what exactly does this mean? Well, what it means is, with inflation having gone in just the last couple of years, if we look at this slide, this is just a 12-month dot plot of inflation. But what we see, if we look at the chart, and I'll beg your pardon, we look from about May of 2020 to where we are today, and we see that the Federal Reserve really didn't initiate the first rate hikes until inflation was about 8.5%. And I'm going to come back to that. When we talk about what does inflation do to rob us of our savings, well, when inflation is running at 9%, effectively this means $100,000 is only going to be buying $91,000. When inflation spirals out of control over a multi-year period, think of it, 10, 20, 30%, that's a loss in purchasing power. If you're sitting in cash and you have $500,000 in cash and the dollar loses 20, 30% of its purchasing power, it's very scary. And so inflation and the declining purchasing power of our dollar is the #1 reason that we're buying gold and silver. We talk about, and we're going to talk a little bit more about the guidance the Federal Reserve offers, and they do. Jerome Powell, the chairman of the Federal Reserve, spoke on Friday at Jackson Hole. It's an annual event. The Federal Reserve, you can see, allowed inflation to rise to 8.5% before the first rate hike. It really underscores how long the Federal Reserve turned a blind eye to inflation spiraling out of control. Remember, we felt inflation was going to be transitory. What we're finding out is that it isn't. So let's talk about guidance from the Federal Reserve. Well, back in December, we talked about it. The Federal Reserve announced that they were going to pivot from an extremely accommodative monetary policy to a policy of monetary tightening. In short, what they were going to do was they were going to start raising interest rates. At the March meeting, the Federal Reserve raised interest rates by 25 basis points. In May, 50, 75 basis points again in June, another 75 basis points in July. And you know what, folks? We have another 75 basis points on the table in a couple of weeks in September. This took the cost of borrowing from virtually zero to 2.5% in less than 4 months. This is something investors want to consider. By the end of 2022, we expect with the next rate hike that we're going to be in line 3.2, 3.4% benchmark rate, and we're going to move into 3.8 perhaps by the end of 2023. So again, we're at 2.5 right now. We expect to move to probably, we're at 2.5, 2.75. We expect to move to maybe 3, less than 3.5% by the end of the year. Did the Federal Reserve make a mistake assuming that inflation was going to be transitory? I won't answer that. I'll pose the question. However, we have obviously witnessed since December the Federal Reserve really grappling with and struggling with their ability to get some control, to assert some control over inflation, which is now spiraling out of control. The issue for the Federal Reserve, and this is something that we all have to consider, is it's different now. War and dependence on foreign food and energy continue to limit their ability to control headline versus core inflation. Really simple. Headline inflation is inflation the Federal Reserve doesn't really like to account. It's energy and it's food. We're not self-sufficient energy-wise, nor are we in terms of food. And so the Fed's ability to control core inflation remains intact, but their ability to control headline inflation is severely inhibited. There is a direct positive correlation between gold and silver and rising tensions in the world. We'll make a note. During uncertain global climates, gold really is considered to be the ultimate crisis commodity, and there is definitely a positive correlation between what's happening in the world and gold and silver prices. So let's have a look at what gold prices have done since the onset of inflation. Well, we can see gold prices have moved up significantly. And this is because the Federal Reserve obviously has been making acquisitions and purchases into the market. We're going to talk about the balance sheet that the Federal Reserve is carrying and which they're now beginning to unwind. But gold, again, the number one reason we're buying gold and silver is the declining value of the dollar. And if you look, as the dollar declines in value, gold and silver typically will increase in value. And we're going to talk about this brief little bit where we see a double bottom in gold. We've been moving sideways for a bit. We're going to talk about that as well. Moving on to the next slide. So the Fed's balance sheet in 2008, a grand total of $900 billion. $900 billion. In 2022, it's more than $10 trillion. What's happened, and again, this is very important for investors to consider, and any attendees and anybody that watches this later, the Federal Reserve has pumped $10 trillion into stock and bond markets. And they've done so in the last 20 years. They're no longer buyers. And in fact, what they're doing alongside aggressive rate hikes is they're allowing these investments to expire, and in some cases, they're outright selling them to the tune of $60 billion a month in equities and $30 billion in bonds. So let's remember something. The situation has changed. The Federal Reserve are no longer buyers, they're sellers. The solution to the massive balance sheet that the Federal Reserve has accumulated in the last 20 years, well, really, the bulk of it in the last 14, they've got to allow it to run. They've decided to allow it to run off, and that is something investors have got to consider with respect to how this is going to affect your portfolio. They're not buying; they're selling, and a lot of us have made money in the last 20 years as they've been buying. What comes down must go back up. Not all the time, unless it holds intrinsic value. This is a remarkable chart. What we're looking at is the Federal Reserve's balance sheet. So if we look all the way back to 2007, 2008, we're at $1 billion. 900 billion. And you can see in 2008, the economic collapse of 2008, the Federal Reserve started to make acquisitions. And you can see, in particular, when it came to printing money, when it came to getting involved to restore some sort of stability, the Federal Reserve did not waste any time in March of 2020. However, that process of acquisitions, immediate acquisition, you can see what it's done to the purchasing power of the dollar. Well, I'm sorry, to the Fed's balance sheet. I'll make the connection between the offloading of the Fed's balance sheet and the damage to the dollar in a minute. But you can see the Fed's balance sheet has spiraled out of control. 900 billion in 2008, over 10 trillion in 2020-22. And folks, the issue is the chickens have now come home to roost. I'm sorry to use such a lame analogy, but we talked for decades about how we're gonna have to pay the piper. We're gonna have to pay the piper. Well, guess what? Since December, the Fed's announced that that's exactly what we're going to do. I can't recall the Fed raising interest rates in a recession, and they're about to do it. These are extraordinary times, and the extreme measures the Federal Reserve is taking to tackle inflation now, which they basically ignored as it spiraled out of control. The measures they're taking now, some pundits feel could take another 50% right out of the stock market. So it's very, very concerning, and again, it's a threat to wealth preservation. So the S&P 500 and the Dow Jones.
Go ahead. Joe, if I can interrupt for a second. Yeah, we had a good question come up. I think kind of somewhat speaks to what you were talking about the last two slides, and maybe it's something you're going to address a little bit more down the line. But the old adage, buy low, sell high. I think the question this person had is it too late to get the value now in buying gold or silver, since we're kind of already seeing inflation, already seeing war pushing the price up? Is he at risk of losing money or depressed values if basically doesn't want to buy high, sell low, I guess is the question. So again, if you want to address that now or say that's something we're going to address coming up, That's fine too. I just want to make sure I threw that question in there.
No, and you know what? I appreciate it, and please don't hold back. If there's questions, interrupt me so I can deal with it. Now, the question, if I understand it correctly, is when to enter the market to buy precious metals, or you might not want to buy it. You don't want to buy high to sell low. Is that the question, or are we talking about the stock market?
Yeah, basically, no. Is it too late to get value with buying gold or silver right now because of inflation? And because we're already seeing the war that's going on in Ukraine and Russia. So I guess that was the question: is if with gold and silver prices already kind of up, is it too late to get value? And what's the risk of downward pressure?
Well, the risk of downward pressure is extant, given that we're fighting rising bond yields and the U.S. dollar index. So this discussion today does not revolve around a discussion of the dollar. We could do an entire hour, and we maybe could and should. But let me speak to the issue of holding value. You've got to remember, gold and silver hold intrinsic value. What gold and silver are doing right now is they're adjusting to what the dollar is doing. So let's remember something. Gold and silver aren't going to go up and then go down and stay down. Gold and silver hold intrinsic value, and they increase in value over time with the cost of living. So no matter when you buy gold and silver, it's always a good buy, because the worst that could happen is gold or silver are going to go down, but they're only going to turn around and go right back up again. They're assets. They're not, it's not equity, it's not debt. So We don't buy gold and silver to buy low, sell high anyway. We're buying gold and silver because of the declining purchasing power in the US dollar. We look at it over the long term. We protect wealth, we preserve purchasing power. If you want to buy low and sell high, there's other things that you could look at. But we don't day trade gold and silver. The base gold and silver have built up now at this particular level around $18 for silver and around $17.30 for gold. It's a bedrock, and I really feel, and again, we are gonna talk about why gold and silver and assets have trended a little bit lower since December. But you know what? Gold and silver hold value, and they increase in value over the time with the cost of living. It's always a good time to buy. The worst thing that can happen is they're going to go down, but they're only going to turn around and go right back up again. Okay. If we look at the S&P 500 right now, we can see that since December, now, by the way, there are death crosses, meaning very simply, the trend is down. The long-term trend is down. And the death crosses exist in all three major indices. And of course, it's no coincidence. Since December, when the Fed announced that they were going to tighten, the S&P 500 has been trending down. And you can see that it trades within a channel. Analysts expect more of the same as the Federal Reserve unwinds its balance sheet. And of course, it goes without saying, anybody that's watching the news today knows that all three major indices are also in bear territory. So that is beyond 20%. With the rate hike on the table in September, there's a great amount of fear of what this could also do to stock markets. I'm going to come back and address the dollar and gold prices in a minute. But just moving forward, if we look at the Dow Jones Industrials is also at a critical point. The Dow Jones is, again, the trend is down. And what we see here is the 50-day moving average. So right now, the Dow is sitting on the 50-day moving average. There's a great deal of possibility with the rate hike that we could see a move further down. In terms of investing in or rebalancing your portfolio, I think what investors want to they have to consider what their objectives are and what their risk tolerance is. So this speaks to the question that was just posed. You really need to understand what your objectives are. And I know that if it's capital appreciation, it may not be strictly speaking gold and silver that you're looking at. You've also got to understand your risk tolerance. Are you seeking safety and protection? There's absolutely nothing wrong with protecting what we have worked so hard for. There's a difference. Silver tends to move. It tends to be a little bit more volatile. It's cheaper. Gold tends to be the ultimate crisis commodity. You can buy both, but understanding what your objectives are, understanding what your risk tolerance is as an investor is very important. Again, I've said it a couple of times. I can't say it enough. The number one reason that we're buying gold and silver is the declining purchasing power of the US dollar. Here's a fact, something to chew on. Since 1913, gold and silver not only have retained intrinsic value, they buy all the same goods and services today that they did back then. And gold and silver are going to buy all the same goods and services 100 years from now that they do today. So we have to think about that. Meanwhile, the dollar's literally lost 96% in value. So understanding what your objectives are and your risk tolerance are very important. We really encourage investors to take the emotion out of it and really try to make decisions based on the facts and not at all, the whim of headlines and loud noise. Gold has consistently outperformed the stock market. What we're looking at here is this is 50 years. This is since 1968. And we're looking at gold and the stock market in real and in nominal terms adjusted for inflation. So let's look at the facts. Since 1968, gold adjusted for inflation, the stock market adjusted for inflation. In terms of its real value, gold again, and the stock market. There's no question, if you compare gold to US equities over the last 50 years, gold outperforms the stock market. Why? Well, it's simple. In the last 50 years, the stock market's gone up and down and up and down and up and down and up and down. Gold and silver hold value, increase in value over time with the cost of living. The facts, again, more gold doesn't hurt. More gold doesn't hurt. Should you have more gold in the short term? Maybe. As an investor, you have to ask yourself this question. Depending on age, depending on income, depending on risk. And what this chart shows, and we're going to look at it in terms of the actual numbers, a different table. But what this chart is showing us is that if you had 70% of your portfolio in gold, you'd still, over 50 years, you'd still, if you had stocks and bonds or debt in it, you'd still be looking at a 9% ROI. If you only had 25 or 30% in gold, guess what? Your rate of return is going to be less. An optimal portfolio should have 25 to 30% of its assets in gold. Why? Because they're assets and they're going to protect you. This is an extraordinary table, and let's have a look at what it reveals. 1968 through July 2020, Treasury bills, cash, and stocks. So stocks and cash and gold, all weighted 100%. The second example are comparative portfolios with silver. Again, all 100% weighted, stocks, cash, and silver. Since 1968, if you had, say, nothing in your portfolio with silver, here's what you're looking at. Let's say you had, gold. Let's say you had 20% gold. Let's say you had 30% gold. Makes you wonder why you'd only have 30% gold when you look at this table. Obviously, 70% gold, 9.29% rate of return. This is an extraordinary table, extraordinary. Their rates of return were no less than 6.85%, whether the portfolio was balanced with gold or silver. However, notwithstanding the fact that silver is typically, in terms of its potential for capital appreciation, been a go-to, we see it now. Gold, obviously, over time, has earned a reputation as being the ultimate crisis commodity. So we're not buying gold and silver to buy it low and sell it high. In fact, on the contrary, we're buying gold and silver to hold it so that it leavens our portfolio. It weights it with assets so that we can sleep at night and not worry about what the world outside is going to do to the cash in our bank accounts. Moving on to the next slide.
I was going to say, Joe, we had another question pop up. It was maybe a good one, kind of in talking about that with, somewhat of the comparison of stocks and, not buying low and selling high. But someone asked, is there a way to receive an annual distribution from gold and silver as opposed to just making profits at the time of sale, or however long it is that you hold? Maybe it's something that's a little bit different about gold and silver as opposed to other, not offering an ongoing cash flow or a distribution stream. But just wanted to throw that question out there as somebody asked that on the chat box.
There is no yield for gold and silver, and so no. And that is why gold and silver, at least in the short term, have been battling rising bond yields and the spiking dollar on the index, not to be confused with its purchasing power itself. But so no, it does not yield anything, and so that's why typically gold is going to compete with with rising bond yields and a rising dollar.
All right. Thank you. We'll
Okay.
continue. I have another question come in. I'll hold that and let you get back to the presentation and keep moving.
Yep, and I'm going to address it. I know that we've got to talk about that again because gold and silver have been trending since Christmas. But again, gold and silver have been trending as the Fed at first raised interest rates 25 basis points. Remember, inflation was going to be transitory. So gold adjusted to the Fed's guidance. They said we're going to do it at 25 basis points. What happened in March? They went 50, then they went 75, then they went 75 again. They've never raised interest rates in a recession. Now they're going to bump them another 75 basis points in a couple of weeks. So what's happened is gold and silver aren't losing value. Gold and silver hold value. The dollar has been adjusting to the guidance the Fed is giving. The Fed says we're going to raise interest rates. What happened? The dollar goes up. It's our position, and we believe the facts bear out. The dollar's actually peaked and is coming back. And we believe that there have been significant double bottom technical formations in gold and silver, and they're both moving back up. But I want to address there's been a period where it's been trending down. It's only been doing so because the dollar has adjusted to the Fed's forward guidance and gold is adjusting to the dollar. The gold to silver ratio is a widely used indicator values obviously silver in terms of gold. And just as a very, very neat little exercise, if anybody wants to take a calculator right now, typically when the ratio is 80 to 1 or near that, we've seen significant gains in silver. Some experts believe, again, that the silver to gold ratio could go back to as low as 14 to 1. A low ratio always favors gold. We do want to talk about the gold to silver ratio because when you're trying to make a decision as to whether you should buy gold or silver, it's important to realize that silver follows gold. Silver follows gold. So if we look at gold prices today at 1,730, this is a base, and we divide by the price of silver at say 1,830, again as a base, that is 95 to 1. The silver to gold ratio is 95 to 1, or gold to silver is 1 to 95. In the 20th century, 1 ounce of gold is supposed to buy 45 ounces of silver. It is extremely wide right now. Silver is cheap, 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 which is why we see people buying silver, notwithstanding the fact that over the long term, obviously gold has got a slight advantage. So the gold to silver ratio is what we employ when we want to make decisions as to how much gold or silver, not only that we want to add to our portfolio, but the reason is because we want to know whether gold or silver are under or overvalued. Anything greater than 45 to 1 in silver means silver is undervalued. At 45 to 1, 40 to 1, it's valued. All right, so moving on, and you could take a calculator to figure this out any time. I'm going to say one more time. If gold moves to $1,900 and silver prices are, let's say 25, so if we go 1,900 and we divide by 25, you've got 76 to 1. You can see how the ratio changes. Now, the last thing we should do before I talk about this slide is if it's been 45 to 1 for the 20th century, if we take $1,700 and $30 gold right now, $1,730, we divide by 45, well, silver potentially $38, $39 today, if the ratio were where it always has been. The long-term outlook for gold is extremely strong. Central banks around the world are massive net purchasers of gold. China, Russia, anybody, where previously they were net sellers. The long-term outlook for silver, it's by far the greatest, even better than gold, and that due to a very basic financial concept, very basic supply and demand. There's no supply, incredible demand. In fact, world investment for bar and coin sales continues to reach new records, silver specifically. And so prices are expected to rise exponentially. And it's, again, over the long term, this has to do with a stronger physical demand for silver combined with a dwindling above ground supply. We believe silver is an excellent long-term investment, and we believe because it's 94 to 1, the silver to gold ratio, we believe it's cheap, cheap, cheap. The US dollar. Here is a chart of the dollar going back to 2001. What we can see is the dollar is topped. We believe this is a double top we see in the dollar, and we believe the dollar is going to come back. Now, the dollar peaked in March and then again in July. In the week of July 21st, it peaked again at about 108, and that's where we are right now. We're about there, but the dollar's peaked and it's going to come off. Now, this is really significant. If we look at March of 2020, what happened as the dollar went? Well, what's happened, of course, is silver has doubled in price, and gold has basically made a move of over 30%. So in terms of buying it now, buying high, no, gold and silver hold value. They're holding that they've held value, and as the dollar peaks and begins to come off, they are really going to begin, we believe, to show some legs. And the reason is simple. The actual purchasing power of our dollar is declining in value. The only thing that gold and silver compete with are rising bond yields. And with the dollar having peaked and coming off, every time you see the dollar move, you're going to see gold and silver move as well. And that has everything to do with the fact that gold and silver trade in US dollars. So again, from a chart perspective, it looks very much like gold. It looks very much like the dollar has peaked. We believe it's coming off. But what we're witnessing, and yes, there's a possibility we could see a little bit of a downside, but what we're witnessing gold adjust to the dollar, and the dollar's adjusting, obviously, to the Fed's forward guidance. The S&P 500 stock markets are all in bear territory. We talked about that. It does look like the stock market's primed for further losses. Why? Really simple. Folks, we're going from virtually zero in the spring to almost 3.5 by the end of the year. Much of the banks, the greatest part of the market have been buying equities on 0% cheap money, and there are, again, some real concerns that the sell-off now is going to be significant. Notably, Jerome Powell said Friday that they are going to continue to be very aggressive in terms of their fight with inflation. And again, here is a close-up look. So from Christmas time, right, we see this channel. I spoke about this channel earlier, but we see it, pardon me, and you see stocks generally trading within the channel. So again, simple. The short-term trend may be up, the long-term. The short-term move may be up, the long-term trend is definitely moving the other way. And in terms of what's happening with gold and silver, is there a cup and handle in gold? This is something people are asking a lot about. And we hear this a lot. And what is a cup and handle? Well, a cup and handle is a technical indicator. And the idea is that the depth of the cup, and this is right from Investopedia, the depth of the cup is going to form the length of the rise within the handle. It's a very simple technical tool, and analysts use it to predict future price. A lot of people are asking about a cup and handle in gold, and let's have a look. So this chart we're looking at is May, June, July, and August for gold. May, June, July, and August. And is there a cup? Most assuredly, there looks as though there is. Now, gold, I can tell you, this is a candlestick chart. The green is up, the red is down. This is a $200 depth. So we think a move to $1,900 or more could definitely be in the offing, and this is gold short term. So the idea is that once gold prices rise above the handle, which is right here, it becomes a valid buy signal, and the upside rally creates the price. So is there a cup and handle in gold? Yes, there is. Here's a closer shot. Again, this is the 25th of August. So this is really important. Again, here's the cup. Gold is moving up. And why is gold moving up? Because the dollar's peaked and is coming off. Remember, this is what's happening. That's what's happening. We can't argue what's happening. Is silver poised for a major breakout? Well, it certainly looks like that could potentially be the case, because if in fact the dollar has peaked, then it's likely to sell off. The dollar sells off, we are going to see some real moves in gold and silver. So the question remains, has the dollar peaked? We believe from a technical perspective it has, and again, that means that base we've seen gold and silver build at, say, 1730 and 1830 respectively remains intact. Unfortunately, this chart is not very large, but what it does show you is that there is a rather large cup and handle formation in silver prices also. And when I say rather large, a $2 or $3 move in silver, for folks that watch the market, silver can move sideways for 3 weeks, and then it'll move $2 or $3 in a day to catch up with gold. And everybody's wondering what in the world. So what we can see is that silver is definitely poised to make a move, and we think that silver very possibly, and this is just, it's neat to consider, we think silver very possibly could be targeting $23 an ounce. We believe that's happening right now. So here's that base of support that I've been telling you about. Mind you, silver prices are way up here, but the base of support back, we're going back a couple of years. We see silver is through resistance. There was some trend line resistance. Silver is through that now. Again, we feel that it's poised for a move. Remember, there's a bit of a cup and handle in silver as well. We feel it's poised for a move. It's been as high as $30, folks, for folks that aren't actually actively watching the market. Silver prices have been as high as 30, gold as high as 20.76. Here we see silver again. It's critical long-term and short-term support. Again, with inflation rising at the highest pace in 41 years, the silver to gold ratio, it's 94 to 1 today. It was 92 to 1, obviously. We did this. But we can look at the 50-day moving average. So once silver moves above here, for folks watching, we expect a move from a technical perspective. So we work exclusively with Dylan Gage, an authorized purchaser and distributor for the United States Mint. And I know we covered a lot today. However, what I'd like to remind people is that the value add for you if you diversify your portfolio is patent. The threat to wealth preservation is greater than it's ever been, and rebalancing and having a good look at how you can protect yourself now as the Federal Reserve really begins to attack inflation. This could be a 2-year chore for the Federal Reserve. The value add is really significant. Working exclusively with Advanta, the cost to store metal is only 10 basis points. Dylan Gage, the purchaser for the Mint, owns International Depository Services at 10 basis points. This means literally you can store $100,000 worth of metal, gold or silver for $100. It's incredible. The value, it really is incredible. And so we're not here just to sell gold and silver. I sell gold and silver. I could tell. I know anybody could tell that listening to me. But what we're really here to do is we're really here to help. Allen House Metals is an authorized dealer with the purchaser and distributor for the United States Mint. I buy and I sell COMEX and London Bullion Market approved products. I'd be happy to answer, and we'd be happy to answer anybody's questions. We want to be able to show investors how easy it can be to rebalance your portfolio. The accounts are always in your own name, of course. And so with no downside, you got to ask yourself, why not? If you call 561-284-6443, our number on this screen, make a note of it, reference the Advanta IRA webinar, and you will receive a discount on your purchase. We don't post the discount amount because, frankly speaking, we use a percentage, and it's significant. And I will say you won't pay more elsewhere. We can assure you lowest price is guaranteed. So without further ado, Scott, I'll turn it back to you. If there's any questions, I'd be happy to answer them.
Yeah, thanks, Joe. We did have a question come up, and then certainly if anyone has any closing questions here in the last few minutes that we have, please get those typed into the question box. But the question was essentially, can you compare the advantages and disadvantages of having physical metals held at a depository versus owning them in a metal fund, like just investing in like an ETF type situation?
Sure, really simple. Physical metal holds value, and ETF does not. So one holds value, the other does not. And gold's going to not only hold value, metal held in an independent depository will continue to increase in value over time with the cost of living. Whereas, as you know, paper holds no value. You could potentially, in theory, end up losing a substantial part, if not all of your original investment.
Yeah, so and I guess I was gonna say, and part of the question, I guess, of the follow-up the individual had too is kind of just whether it would be maybe easier to rebalance the whole portfolio if they have a fund, plus any cost of the depository, which we covered is very low. Obviously, the funds have their own fees as well, depending on what you're investing in. But it's easier to get a distribution from a fund. Maybe just talk for a second. It seems like maybe some of the concern, Joe, would just be in buying and selling the gold that you're holding physically. Like how difficult a process really is that to do?
Oh, thanks for asking. First of all, it's not difficult at all. It's easy. We settle overnight. So the transaction, provided it takes place before, say, 4 p.m. today, cash in the account typically next day. Remember that because we're an authorized dealer with the purchaser for the mint, Dillon Gage is located in Dallas, Texas, and you must understand IDS, where all of the custodians will store their metal, it's across the parking lot from the distribution center. So literally, what we do is the boys will put the metal on a pallet and they'll wheel it across and they'll deposit it into your storage, your vault. And so you are 100% liquid. You move out of metal into cash and cash into metal instantly. Literally, it is wheeled across a parking lot on a pallet, literally. So, and in terms of costs, we take calls all day, every single day. And I can't tell you, in terms of the comparisons, we literally have people storing $1 million in metal for $1,000 a year. I don't know any broker that you could deal with when it comes to fees, commissions. I don't know anybody. I mean, some of the annuities are charging as much as 8% of the gross. I know you could buy some funds out there independently from some of the discount brokers. And again, I own funds too. I think the important thing, again, is the focus is on diversification. Not saying there's anything wrong with funds, but if you want to know the difference between precious metals and a fund, one holds value and is going to continue to increase in value over time with the cost of living. The fund, it may as well just be a stock. It's only a piece of paper.
Sure. Thanks, Joe. Thanks for that great answer. As we're up here at the top of the hour here at the end of the presentation, wanted to again thank everybody for coming today. If you have any other questions, Joe had certainly had his information on there as well. You can go to allenhousemetals.com as well. If you have any questions on the IRA side of things, please just reach out to me. Again, Scott Maurer, Director of Business Development here at Advanta IRA. Email, phone call, whatever the case may be. Like I said, you can reach out to Joe as well at allenhousemetals.com. Or Joe, why don't you give your number out one more time for everyone that's listening?
Sure. And if anybody wants to call with respect to just looking at the charts, I'd be happy to. Reference the Advanta IRA. I want to talk to you. It's 561-284-6443. Again, we're going to make it easy for you. No pressure. If it's not a fit, we're always going to shake hands and part like friends.
All right, Joe, thank you very much for coming on and sharing the update. I'd love to we'll have you on again in a few months and see how things are shaking out in the next five or 6 months and see what the numbers look like then.
Thank you very much, Scott. Good luck.
All right, good. Thank you everybody for listening live, and those of you listening to the recording. Look forward to seeing you at our next event. Thank you.